Hey guys, this is Jeremy Morgan with Abbey Realty. I appreciate you joining me here. I'm also joined with, or well, not joined, I'm commandeering his office for the most part. Eddie Skinner with Storehouse Mortgage. So,
hey, how are you guys? Thanks, Jeremy. Appreciate you having us here.
yes, sir. If you don't mind, just kind of give us a brief introduction of who you are and where we're at, what we're doing.
Absolutely. Hey, so I'm Eddie Skinner with Storehouse Mortgage. We've been in the broker business for about 11 years now, and we've teamed up with Jeremy to help him and his clients. We serve folks. We love helping people, love helping families get healthy financing, healthy deals in the real estate industry. And so Jeremy's a great guy, knows what he's doing, cares for his clients, and man, we just love working with him. So we're going to walk through a few of the details, some of the questions that you as clients often ask.
Yeah, so buying a house, the word anxious is probably a pretty good descriptive of what's going on, because you're feeling nervous, you're excited, you're having some frustrations, joy, sadness, you're moving from somewhere else, you're coming to a complete new place. So we're trying to take some of those aspects out of it and just make it a nice smooth transition for you. So with that, mortgages, we want to have that kind of lined up before you get started buying your house, or at least looking for your houses. So with that, there's a pre-approval or a pre-qualification if you're buying your house 6 months down the road, 2 months, maybe you're flying in from out of town to buy a house this weekend because you just got relocated. Kind of, if you don't mind discussing what the differences are.
Absolutely. Let me address first kind of nervousness. One of the things that I've found is before you do anything, you got to find somebody that you like, that you trust, that you work with well. And so I just applaud you if you're considering working with Jeremy. He's trustworthy. There's a lot of agents out there, thousands and thousands of agents, but you got to connect with one you trust, because they're going to be offering you great advice and walking you through, the most expensive purchase that you'll make in life typically. And so you want to get with the guy you can trust. On the mortgage side, we do a lot of homework up front to make sure that you qualify, because the last thing we want to do is let you get in the car with your realtor, start looking at all these houses, and then you can't afford it. And so we do a lot of homework. We're going to ask you to complete a loan application. We're going to pull credit. We're going to check the docs that we need. And so our pre-qualification is really like many folks' pre-approvals. We're going to just make sure that you're ready. Worst thing we could do is send you out to buy a certain price range house and then come back halfway through the process, or like Jeremy and I were discussing a few minutes ago, 3 or 4 days before closing, we come back and say, hey, sorry, this one doesn't work. And so we want to make sure that we do our homework and dig in beforehand so that everybody does not waste their time.
Exactly. So kind of going back with that, looking to see who exactly you're working with, what's the main difference between going to maybe somebody's bank like a Chase or Wells Fargo, just walking in, talking to a teller who doesn't know what they're doing, or hey, go see this person, and they call corporate?
Yeah.
What makes you different as a mortgage lender?
Man, I just tell you, one, you're going to get us to answer the phone. And so the fact that we answer the phone, oftentimes we answer the phone on weekends. We prefer, unless you have to have us do that you respect our time. But at the same time, we trust you. If you as an agent or a client call us on the weekends, we know that you need us. And so we answer the phone. We've got 3 or 4 people on our team. We don't pass you around to everybody under the sun, so you're going to be able to get in touch with us. We know each other. We've got a fantastic setup with loan partners that assist on putting the files together. You'll always have access to me. We've got a processor who's fantastic. She cares. She answers her phone. She gets you to the finish line. And so I just tell you, lots of internet lenders right now that you can talk to, and their approach is swing it all against the wall, and if any of it sticks, man, they're excited. And if it doesn't stick, no skin off their back, they'll go to the next one. Because we know our agents we work with, it matters. And so if I lose Jeremy's trust, then I lose his referral business. And so we go the extra effort on our deals so that we make sure that he's covered and that you're covered because you're working with him. So,
Exactly. So before somebody actually gets into the search and qualifications and whatnot, one of the things that you're going to be checking is their background or pre-qualifications? Are they employed? Do you have any kind of equity in a current home?
Right.
What are some of the documents that they're going to be needing up front so that they're not, 2 weeks after submitting an offer, you're not having to ask for more documentation because they didn't quite meet that threshold?
So we have an acronym that we use. It's called ALICE. And so A stands for assets. And so we're going to try to get bank documentation. We need 2 months worth of bank statements to document exactly how much money you have for down payment, stuff like that. L stands for liability. So we're going to pull your credit, and that tells us what do you owe on a car payment, student loans, credit card debt, any other loans that you have. The I stands for income. So we're going to get 1 month's worth of pay stubs. We want to find out, are you W-2 or 1099? If you're W-2, we're going to get those 30-day pay stubs. If you're 1099 pay, then we need 2 years worth of taxes so that we can calculate what do your tax returns say that you made. The C stands for credit, so that's your credit score. We need something 620 or above. We can work with that. And then the E stands for equity. Do you have any equity in a house? And so if you go through the ALICE acronym, that's what we're going to collect from you. That's going to give us a picture of whether you can qualify or not to buy a house. It's pretty simple if we do the right homework with you. So.
Exactly. All right, so with that pre-qualification, you should have kind of a budget of what you're thinking about buying in the first place, but you're obviously going to be sitting down with Eddie here, kind of going over that budget, and projecting what you're going to be spending per month. We all have mortgage payments, but we're also going to have groceries or car loans or car insurance. So you should at least know where your money is going every month and have a good budget. With that, I'm a little bit more on the conservative side. So I hear a lot of people say, 20 to 30% of your pre-tax. I would kind of advise maybe after tax, but again, I'm very conservative. What do you kind of advise people? And have you ever told anybody, actually, you probably shouldn't buy a house right now because you can't quite afford it? For us, a home should be a blessing, not a burden, and we don't want to take you to that $300,000 house whenever you should be around the 240 to 260 range.
So I always start with what is that payment that you're comfortable with as a client. And so that's where I start. I can typically qualify folks for a higher payment than they ought to be paying. And so we don't want to be house poor. So if they get in a house, can't afford to put furniture in it, or they can't afford to go out to eat, or can't afford to have any fun, then that's going to lead to other issues in their family that we don't want to have happen. So we want happy people in happy houses, happy homes, and so we always dial that in. And so a lot of times on the pre-qualification, there's some things that we can't count as income for the loan guidelines, but yet it's some extra money that they're making. And so we always try to dig in and make sure that there's some cushion and really some breathing space in the budget to make sure that you're healthy. So I just encourage you, that's the difference between some internet lenders and some folks that really care. And so my nickname is the Mortgage Pastor. I really do want to be your friend after the transaction. I want to be your friend 2-3 years down the line. We want to be your team that works. If you want to move up or down later on, we want you to have good memories of us, that we can do that again together. So.
And we say pastor, he actually has a background in being a pastor. So that's
23 years.
That aspect of wanting to help people. So this is that family home that you're looking for. With that, what are some different mortgage options out there? Is it just a one size fits all? You've got the conventional and that's it.
Nope.
You pigeonhole it.
So we do conventional loans, FHA loans, USDA. We do jumbo loans. So we've got all sorts. The ones that we don't do personally, currently, we've got partners in the business that do those. We refer those out, or land loans. And so we do not do raw land loans. But anything with a house on it, we can help you with.
So with that, could you go kind of in the step of the process, maybe once that offer gets accepted by the homeowner, the game's basically started. You got so many days for closing. What's kind of the process of going through maybe the appraisal? And I guess that's kind of a big issue right now. I'm sure y'all are staying crazy busy with refinances. So the market is just exploding. These guys are overworked, underpaid. I wouldn't say necessarily that.
No, we're paid well.
Teachers.
So what I would share with you is typically a 30-day process that we go through. So once we gather your stuff, we send Jeremy a pre-qual and say, hey, these guys are good up to a certain amount. He negotiates with the listing agent to get the contract agreed upon. Once he sends that to us, we review all the docs, refresh and update bank statements, pay stubs to make sure we have the most recent ones, and then we submit that into processing. Typically, depending on the bank that we have to take you to, that's a 3 or 4 day process for them to review it, underwrite it, and then they come back. So we send to the processor. She represents all of us, you, me, Jeremy, all of us. She represents us to the underwriter. The underwriter is kind of the grand poobah of this whole thing. So if they give us the go-ahead on this, they give us what's called a conditional approval. Once we get the conditional approval, then we all work together to get those docs back in so that we can get the clear to close. The appraisal is ordered early in the process because the appraisals right now, because we're so busy, the appraisals are taking 2, 3, sometimes 4 weeks to get back. And so we typically have the clear to close on you as a client, but we've still got to get the house cleared to close through the appraisal. So we want to make sure that you're getting a fair price on that, not only for your sake, but for our sake. So it saves us both the hassle of overpaying for a house.
Right. And with the market kind of exploding right now, lots of the houses are over listing price, if not at price, but they're coming in appraised lower than what you're actually offering and what the current market is, because the appraisals are based off of historical data, right, within the last 180 days or even a year, based on comparables in the area. So what are some of the issues you might have seen for going to closing and that deal falling apart? What are some aspects that you could probably do to avoid that happening?
So on the appraisal issue, the statement that Jeremy just made of we're in an inclining system right now, so the values are going up, but if the appraiser goes back and reviews this for the last 6 months, those values are going to show a lesser value sometimes than what you're paying. So here's the options. Once you get that, if you buy a $200,000 house, it comes in at $195. We're going to base everything we do on $195 price. So at that point, there's a $5,000 gap that has to be made. Either you as a buyer say, I'm going to bring an extra $5,000, or the listing agent says, I'm willing to drop the price to $195. But as the lender, we're going to protect you from overpaying on that. So you have to agree, I'll make up the gap, or the seller will do that. So.
Right. So obviously there's some negotiations back and forth. You can kind of help mitigate those issues and challenges that are coming up right now.
And I would say that's again the value of having a realtor you trust that can stand toe to toe for you, that can represent you, that is calm in the midst of conflict, because sometimes those can get heated. And so that's where I think Jeremy can represent you well, because he's mature and can negotiate on your behalf in a professional manner. So,
all right. Well, that's kind of a heavy overload, in a very detailed aspect of the industry. We really didn't even scratch the surface, guys. But if you have any questions, feel free, if I can speak today, feel free to reach out to Eddie at any time. You want to give them your information,
absolutely,
where they can find you.
So my company name, website is storehousemortgage.com. I can be reached cell phone at 832-347-8261. Email is Eddie, EDDIE, at storehousemortgage.com. And Jeremy's got all that, so if you go through Jeremy, he can shoot it over to you, and we'd love to work together with you guys.
Sir. And again, even if you're not looking to buy a new house right now, they are doing the refinances as we talked. I'm actually getting one today because I do trust these guys to take care of me. So any questions, feel free to reach out to them at any time.
Awesome.
All right. Thank you, guys.
Thanks, Jeremy.